Section 3. I like this bit. This is the fun bit because it's all about the different types of risk. It's just definitions. I'm not going to go into complex, analysis of what they are. I'm going to tell you what they are. And in some cases, I may, give one or two examples. So let's get right into it. Entrepreneur risk is the risk of an entrepreneur failing to achieve their purpose of business. Entrepreneur risk is not one that's been highly documented, but it's an actual risk. We have loads of entrepreneurs. This includes tech startups, fintechs, small service companies, business coaches. We have loads of them these days, business coaches, personal development coaches, well-being coaches, convenience stores. These are all entrepreneurs, service providers of all sorts. They are entrepreneurs and need to know that they have risks to manage as well. Next one, enterprise or entity risk. This one has been commonly referred to as enterprise risk. An enterprise can sound a bit confusing because it makes you think that it's all about big corporate bodies. No, an enterprise can be small, medium, or large. Entities, makes it sound even better because an entity can be small. It's the same thing. It's really the same thing, but I'm just getting you to see that they're all the same thing. Enterprise, entity, all the same. So every entity or enterprise type have risk common to them. This is called enterprise risk or entity risk. Some enterprises are profit organizations or not-for-profit organizations. Operational risk. This is the risk of loss resulting from inadequate or failed internal processes, people, business systems, or external events. And this is one definition taken by the Basel Committee. The Basel Committee is an organization responsible for governing how banks operate. So I'll put this simply. This is the possibility of loss to your business operations as a result of your business processes not working, or that the people you employ are not doing the right things, not having the right technologies, or your technology developing faults. These are things that can affect you. On the side of external events, these are events beyond your control, such as natural disasters, change in government. Oh, we have one big one now, Brexit in the UK. Yeah, that's a big change in government. Consumer behavioral changes. Anything outside the control of your organization or outside your control are external events. And these all encompass what your operational risk is. So it's people, processes, systems or technology, and external event. That's your operational risk. Supply chain risk. Supply chain risk are the risks associated with the supply of goods and services. It may be that there's a disruption in, say, China. There's something going on. Oh yeah, we got stuff happening in Hong Kong. Yes, we all know that now. It's all in the news. So stuff happening in Hong Kong, and your supplier is out there and they can't get the raw materials for your goods for you to do what you need to do down here. That's one step in your supply chain. Or it might be that the transporters, you got to transport your goods. So logistics, haulage is all part of supply chain. Your transporters or lorry drivers go on strike, airlines go on strike. These things affect your supply of finished goods to the market. That's your supply chain risk. Finance risk. Finance risk is the possibility that the shareholders of a company or investors or other stakeholders will lose money as a result of the organization, the company, not making enough money. Finance risk applies to all types of organizations, whether they're small, medium, or large. Credit risk. This is the risk of borrowing. Credit risk is the risk of default on a debt that may arise from a borrower failing to make required payments of the money they've borrowed from a company. This can lead to the lender adding interest to the amount borrowed. They might also add collection costs. The impact of you failing can affect your credit rating, potential bankruptcy if not repaid. And if that happens, ultimate loss of your business is also a possibility. Market risk. Market risk is the possibility of an investor experiencing losses due to factors in the economy that may affect the overall performance of financial markets. This can include things like interest rate, increases from the central bank, or other regulatory factors common in different economic jurisdictions of the world. Investment risk. Investment risk is the possibility of loss happening as a result of money that you've invested not giving you the profits or return that you expect. Liquidity risk. This is about having enough money to be able to meet your financial obligations to your organization or to your clients and customers. Cybersecurity risk. Cybersecurity risk is the possibility of a cyber attack on your organization. This can happen when hackers, you've heard about the term hackers, when someone who's not part of your business tries to get into your computer networks to either bring down your business or steal money. Physical security risk. This is the possibility of loss to physical assets or to human lives as a result of theft, terrorism, or some form of crime. This is your physical security risk. You will hear about this every day on the news of loss of life, loss of property. That's your physical security risk. There are other types of risks which you will see in the course notes. Please take a look and review them and research them as well to find out what they're all about.